Are all the participants in? How about Justin?
Yes.
Okay, good morning to all of you. Okay, thanks for joining this training. I'm Natalie from Crescendo Training Management. I have been a training auditor for almost more than 15 years. So today training is going to be a short one. It's just 4 hours. We are going to cover this topic about audit independence. So in real life, when you become an auditor, there will be a lot of situation that you might encounter in your working situation that may affect your independence. And not having the independence can actually affect your decision making, and it will affect your judgment on your opinion on your financial statement later. So as a young auditor today, I hope that this session here can help you to look at the threats, the situation that you are going to face maybe in the future that can affect your work and also affect your quality of your audit opinion. So at the end of this course, okay, what you are going to able to get back, if you look at the material that I have sent to you, okay, there are 3 learning outcome from this training. The first one will be you are able to state the importance of audit independence and apply your knowledge in your working environment. And you will be able to suggest minimum 5 threats to auditor independence in accordance to the Auditor Code of Ethics. And also you will be able to suggest different types of safeguards. There is a solution to minimize the threats of independence in your organization. So before we start the training, perhaps we can do an ice-breaking activity. We can get to know each other first. Maybe a short one, okay, because the course is a very short course, just 4 hours. So I hope that maybe we can spend some time maybe to get to know each other so that we can share all the issues that we face in our working life with all your fellow colleagues. Okay, so again, my name is Natalie. Can I just hang on now? Okay, so I saw all your name here. Okay, maybe you can introduce yourself first. What you can do is yeah, Aiden, maybe we wait for. Yeah.
Before that, as audit junior like us, is it very difficult path when decide to go like the audit for our future? Yeah, in our future, like.
Not difficult, but I think the working life as auditor, I think you also experience now, right? Can be like very long hour lah, really during the peak period, right? So I think you all also do OT until very late. Sometimes I heard like 10 o'clock, 11 o'clock is very common, right, for you all. So but these things doesn't last forever lah. Nobody become auditor forever for their whole life. Usually they become auditor because they wanted to get the recognition from the professional body. We call it the license. Okay, so you have to work in audit firm for a minimum 3 years. Just like you become a doctor, right? You have to practice 3 years. Actually, all professional is like that. Engineer, a doctor, accountant also is the same. So the reason why we go to audit firm is because we want the exposure, we want the experience for 3 years. That is the minimum, and in order to get the license to be recognized by MIA, Malaysia Institute of Accountants.
Understood. Thank you.
Yeah. So maybe we can start with what I want you to do is, can you take out a piece of paper, white paper, and then I want you to draw a picture, a symbol, or an icon that represent a good auditor, an ethical auditor. You can just maybe take 10 minutes, maybe think of what can represent a good auditor to you as a good auditor. What kind of symbol will you use to represent yourself? Maybe we start 10 minutes. Can you think of that? So after you finish, can you send your picture to our group that we have created, to our WhatsApp group that we have created. And then from there, I will compile it together so everybody can see everybody's picture.
Okay, no problem.
Okay, so I received the picture from Cheng Ming. Let me paste it into the summary picture. Oh, this will be. Then one more from Aiden also. Okay, I also get from Jia Yang. Sorry for the noise, because let me compile the picture first. Okay. Very nice picture. Why you all draw the same the triangle? Okay, so I got 4 pictures here. So we still have 2 coming from our participants.
Miss, may I ask one question?
Yes, Aiden.
So for your opinion, then what kind of picture or icon would you draw? I mean, to describe as an auditor.
For myself,
Uh,
to be a to represent my moral code of ethics, is it? Okay, wait, I draw a
just
last one. Wow, this is a bit deep from Zhu. This picture is very artistic. Okay. For myself, I think I will draw like a weighing machine, like the traditional, the one that got the debit and credit side one, to represent fairness. Wait, I convert to PDF, then we share what you all draw.
Miss Jewel type in the chat.
Sorry?
Jewel got submission on the chat.
On the chat, okay, okay. Wait, later. No problem, Joel. Can you can you join back later . Okay, I'm converting the picture to PDF now. Let's share what we have here. Ta-da! Can see it now.
okay.
Later I show you mine. Okay, so okay, these are all the picture you draw. 1, 2, 3, 4, 5, 6. Okay, 6 here. Maybe while we wait for Zhu to come back, I show you mine. Can see or not mine? Okay, I think this is what I feel auditor should possess. So to be auditor, I think we need to be very balanced, very balanced. Not to be influenced by any party. Okay, of course, when we go out and work as auditor, there will be a lot of temptation. And then client also can have many requests, ask us. They can actually pressure us. To do certain things that maybe we don't think is ethical. So it might be sometimes we will not be balanced and we will be tilted maybe to the left, maybe tilted to the right. So when we are influenced by people, because day in, day out, you deal with them, you talk to them, and you become their close friend. Sometimes it will, even though we try to be independent, we try to be objective, sometimes it can affect how we view things. Because in accounting, there are a lot of things that is not black and white, that we require judgment. We judge based on our experience, based on how we feel about the thing, we judge whether it's correct or not. Of course, we have accounting standard to help us, but then not all the area is very clear whether it's right or wrong. Like there is a lot of accounting estimate, right? We learn. So these two things sometimes can be not balanced. So when we are not balanced, we actually put ourselves in a very dangerous situation. We might give wrong opinion, and that might actually lead to litigation. Your client sue you because you express a wrong opinion, and that can actually have very serious implication. One of the implication will be they take back your license. Then you cannot become an auditor in the future. Okay. Maybe MIA take action against you, give you a warning letter like that. Okay. Or maybe you can see news, right? Like Big Four, right? They always got sued. Have you read news like EY got sued, KPMG got sued, then they pay a lot of money as compensation? That is sometimes will happen because the client feel that we are no longer independent, so they hold that as a reason to actually ask us to pay compensation for their losses. So we need to take care of all of those things. Okay, so I close mine. Okay, how about you? I share the... Okay. Can we maybe start with Aiden? Do you want to start first? Aiden, can you help us to start first? Okay.
Okay.
Yeah,
No problem.
You can see on the screen, right? Okay, Aiden picture is the one that is square, okay, with 4 colors. Okay. Maybe Aiden, can you first of all introduce yourself? Okay, your name. Can you tell us what is your name? And then second, can you explain the picture, the symbol or the icon that you have drawn just now? What is the meaning? And number 3, can you tell us what is the most important qualities an auditor should possess? Okay, so the first one is your name. The second is what does your symbol represent? And the third one is what quality is most important to auditor? Okay, the quality. The third one is the quality. Is it okay?
So the second and third, I can do it together, right?
Yeah, can.
Okay, sure. Okay. So now first of all, I'm Kang Jiawi. You can call me Aiden. So I'm the audit junior as well. So now let me explain my picture. So I draw the square, because I think like as an auditor, we do things it's very square one. We can like 1 is 1, 2 is 2. We cannot like the round circle. We cannot, because the accounting standard is there and the law is there, so we have to follow. So it's like so I draw the square. So there's inside there's a 4 small square. I clarified to 4 qualities. For the first one, it's like courage, because as an auditor, we might take risk to losing some of our close friends. So so when we have the courage, so like how to say, we are taking the risk. So even that we lost, so we just need to deal with that.
Yeah, endure and continue.
Yeah. The second one is integrity. Integrity is similar like honest. Because unethical thing, even though client maybe ask us to do some like the audit adjustment, which is not ethical, but
which is very common.
We have but actually I do not have any solution. We just need to influence back to the client, tell them this is wrong and we cannot do this and that. Because as an auditor, we have to like integrity. And the third one, I think is like determination, because we have to right judgment. I know it's difficult to be an auditor, but when you decide to join in this like as an auditor in your career, so
are you prepared?
What can you be?
You have to prepare yourself already to deal with all the challenges.
Yeah, true. So its determination is also one of the qualities as being as auditor.
Yes.
So the last one, actually the last one is honest, but I think honest and integrity is more kind of similar. So yeah, so in this overall is my explanation and the quality as being as auditor.
These are the 4 quality you think is the most important. Okay, thank you very much, Aiden. Okay, can we give Aiden a clap? Maybe you can.
Maybe I gave myself. Thank you very much.
Okay, thanks Aiden for the introduction. Maybe we can go to the next one. Maybe Wenqi, do you want to try? We take a boy, then we maybe give to the ladies.
Okay. Hello guys, my name is Wenqi.
So Wenqi, your picture is the one that is the brown one, right? Good character.
Yeah.
The one. Okay.
This is I draw this mind map is because I think this is the most simple and easier to be understand by everyone. Okay, so the first most important quality that the auditor must have is, I think the honesty is the most important as an auditor.
True.
Because the whole financial statement will affect the the investment decision by the shareholder.
Yeah, true.
And the second is responsibility, also important not only as an auditor but also as an employee. So the third is time management.
True. Because
Once
always auditor.
Yeah, once can manage the time well, then I believe we can do the thing well also.
True, because when you can manage your time, then you can be balanced also. But when you cannot manage your time, then everything go upside down. So which quality do you think is the most important? You mentioned just now is honesty, right?
Yes, honesty, I think the most important.
Yeah, I agree with you. Thank you very much, Wenqi. Okay, we give Wenqi a clap also. Okay, let's go to another maybe gentleman. We go to Cheng Ming. Do you want to try? Cheng Ming will be the first one, right? Cheng Ming, no, in the middle. Yeah, it's a pyramid.
Yeah, hello everyone. I'm Dan Cheng Ming.
Okay.
For my side, I think the 3 important things is the most important thing is impartial, because I think in the audit is the most important thing in the accounting system, because there is the last part. You need to double check all the things that accountant do, and so I think the fair is more important for most important.
Yeah,
okay, the second one is
I think I like the part that you say is the final part, which is very true, because that is really the final control and the final line that we make sure everything is correct before we submit it to our user.
All right, the second one is innovative, because I think in audit, different company and different industry, they might have a different calculating method, different calculating method. So you need to very innovative to
come up with solution.
Sorry?
Come up with solution.
Something like that. Okay. The third one is clear thinking, because similar like the innovative, because different industry, they might have different problem. You need to very clear thinking to how to solve the problem.
Yes. So I think what you say, like, remind me of what Wenqi said, like clear thinking and also maybe your time management. So when you have your time management, you can handle well, then that can actually lead to clear thinking and also in being innovative in solving the problems that you will face. Okay, thank you very much, Cheng Ming, for introducing yourself. Which one do you think is the most important quality, Cheng Ming? Is
the top one.
Okay. Yeah, you put it at the top here. Very good. Okay, so let's go to Zhu E. How about you, Zhu E? Zhu E picture symbol is very unique. Okay, so this is the Zhu E one. Without anything, Zhu E, can you maybe first of all can you introduce your name first?
Hello, can you hear me?
Can.
Okay, hello guys, my name is Tizuel and I draw two pictures of this icon. The first one is crop icon. I think auditor quality is time management is important for them because they have to work long hour as you said in the first part. And the second part is the right icon. I think it represents many things. First of all, creditability, and the second, integrity, truthfulness, and honesty.
Yeah, that means all the right thing.
Yes, and I think the
I
most
thought-
important one is the honesty. Yeah.
I thought it's the Nike symbol. Correct. Okay. Auditor, I think is like Zoe said, is more to marking things correct. Correct. We want to mark them whether they are correct or not. We want to make things correct. Okay. That's why we examine their financial statement. We hope that they can change the system so that next year it will be better. Okay, so let's go to which quality you think is the most important? Just now you say is
Honesty.
integrity, honesty. Yeah. Actually, a lot of you also say honesty. That is really very true. Okay, integrity is actually the most important quality. Okay, we go to maybe we invite Justin. Justin is also a pyramid. Is this the one, Justin?
I know the first one.
Up. Okay, this one. Okay. So
Hi, hello everyone. My name is Justin Tan Yifeng. Before I mention the quality, do you all know why I want to use the green color pen?
why?
Because in Audit Form, we verify the document by green color pen.
Okay.
So I don't think which is the most important quality by an auditor. I think like the hierarchy, the further method is the quality that all of the auditors should have. Like honestly, so an auditor should be honestly when carry the statutory audit work.
True.
So auditors should not accept any bribe from the clients.
True.
So it can help the shareholder and the tax authority to receive the true financial statement.
Correct.
Then secondly is an auditor should also have a good knowledge in accounting and auditing standard.
That is very important.
Like IFRS and all the auditing standard.
True.
So then we also must make sure the standard is compliance with the Company Act law and income tax law.
Yes. Okay. Because non-compliance will lead to many very serious consequences. Maybe you get a penalty or you get some summon. Correct.
So the top of the hierarchy is so like we can go to the outcome. The outcome is ability to trace out facts and figures.
Correct.
So all the incorrect material can be find out to make sure the financial statement presented in a true and fair way.
Very good.
Okay.
Thank you, Justin.
That's all. Thank you.
And yeah, we give Justin a clap. Okay. And can we have the last participant? Is Chayang also a pyramid. This one. Okay. The last
Hi everyone, my name is Song Chiayang and this is the pyramid that I draw. Okay, so the basic one value that I think that every auditor should have is honesty. You must be doing anything with honest. This is the basic, I think.
Yeah.
Okay, so with the second one, which is the confident, everything that you do, especially that you are the auditor, you must be confident to do the thing that you do must be correct one. You cannot be showing like you are not sure this is the correct way that I do. You must be confident that everything that you do is the correct things.
Yeah.
Okay.
I agree with you, Chang Yang, because sometimes when we show if we are not confident on something, then the client actually can detect our being not confident. So if they feel that we cannot handle the things, then of course they also very difficult for them to trust us.
Yes, there's sometimes like your senior also they're not sure about, you must be confident that tell them why you do like this is more correct. Okay. So then the first one is the creativity, I think. Why I say so is because when I now is an audit junior, I'm not very sure that what is the new thing that I've been learned, like what's the audit. It's a very new thing for me. So I need to have our own creativity to think that, oh, how the thing is going on, how the thing to be worked. And we need to follow the seniors, and also you will be the senior in 1 day and you'll be teaching the junior in 1 day also.
True,
So you
maybe
must
a
have
audit
your own
manager.
idea.
Not just senior, maybe 1 day to be an audit manager also.
Yes. So you must have your own ideas on how to do it. It's a very correct way.
Yes.
Yeah.
Thank you very much for all your introduction. I give Chia Yang a clap also. So very, very well. Okay, so a lot of you now is already in started to work, okay, and then started to work in this audit firm. So all of you have your own sets of value, okay, that you feel is very important, and I hope that you can hold to yourself very dear this set of value, because this set of value that you think is the most important, and a lot of you say is honesty, being integrity, you carried it to yourself, okay. So to as long as possible when you are in this audit firm, because this value can really define you, can, and also help you a lot in your career path. Maybe we let me share with you another slide. So at the beginning of the introduction, I told you that we are going to talk about one quality, because a lot of you mentioned to me that the quality of integrity, honesty, creativity, being innovative, being impartial, all these are very important quality. But today we are going into another quality that are also very, very important, which is independence. Okay, so this is also one of the quality, and this quality is very important, because this quality, if you have it, is going to lead to being objective. Okay, being objective is going to lead to being fair, which will lead to your quality being honest. Okay, but honesty doesn't come just like that. Honesty is you have to avoid certain situation, then you no need to face honesty issue every day if you can avoid certain situation. So we are going to talk about the threats. Okay, the threats. That means what situation when you see, you don't even want to go into that situation. So if you no need to go into that situation, then you don't have any issue with honesty, right? You no need to be to struggle with being honest, correct? To being objective, because you don't even want to go into that situation. So this is a suggestion situation that you should avoid. When you see this situation, then you want to run away. I'm not going to get myself into trouble and then go into the situation and then lead to you kind of like expose yourself to situation that will make you not honest. Are you okay? So before we go into that today, maybe we start with some introduction first. Why do we need an auditor? Okay. Why do you think we need an auditor? I maybe draw a small picture for you to see why do we need an auditor. So I need to swap this. I get a blank paper here for me to draw. So you can see my new paper.
Can.
Okay, why do we need an auditor today? Is because of a theory called agency theory. Okay, so it started with this company. This is a company. Okay, for a company to operate as a business, we need capital. Okay, so who put capital to a company? There are basically two groups of people who can contribute money to a company. And this money will be used by the company to start business. And you open up branches, you open up shops, you sell things, you buy stock, you do activity. So we call that operating activity. Yeah? So so who are these two groups of person who actually contribute money? First one is the boss. Okay? So the boss is called shareholder. So shareholder are those who buy the company share and then contribute money to the company. Okay. Another group are the bankers. Okay, you can also go to the bank and borrow money from the bank to do business. Okay, these people, they contribute capital, but they don't manage the company. So this company is run by another person, not the shareholder and not the bankers. The bankers and the shareholder, they does not take part in the day-to-day activity. Okay, so they are actually just giving up the money. I'm just giving you money, and then another person will manage the company, take the money and then do the business. Who is this person who take the money and do business? Is the director. Director, they are not the bosses. Okay, so some people, they have this misconception. They think that the director is the boss. So actually, director is an employee. Okay, is an employee. Just like in a house, if you are very rich, you come from a very rich family, okay, you hire a maid. They call it the ketua rumah, like that. The ketua, the maid, the ketua maid. Okay. So this director is like that. In this house, there is a lot of employee, and this is the ketua like that. Okay, he's also one of the employee, but he's the leader. Of all the maid, all the employee inside. So this guy is the one that take all the money and run the company, make all the decision, decide all the things, who to hire, who to fire, whether to invest, whether to do activity, whether to do new product. And so this guy, of course, must be very clever. Okay. So this shareholder and these bankers will make sure that they hire a very capable person to help them to manage the company. And of course, if this director, they are not competent enough, then the company doesn't run well. Okay. But if the director are very competent, then of course the company will make money. So how does the director report back? Do you think they need to report back? They need to report back to this one, right? Correct. Okay. So this director, after taking the money and then doing business for 1 year, have to report. So of course I need to tell my shareholder, shareholder, after I take your money, then now I need to, I use it for this activity, and then I have made this much of profit for you. Okay. So how did he report back? By means of financial statement. By means of your financial statement. Okay. So by means of your profit and loss account, by means of your statement of financial position and your cash flow, all the statement. Okay. So this director will produce. Of course, he doesn't do it. Maybe the people who under him, the accountant, is the one that prepare a financial statement and report back all the performance to the shareholder and the banker. Are you okay? Can you trust this guy? Can you 100% trust him on what he prepared?
May or may not, I think.
Maybe not. Okay, maybe the first year you can trust him because first year maybe you'll have a very good relationship. Actually, this director, he will have conflict of interest. Okay, you imagine if you are this person, you have a lot of money with you and you have a lot of authority and power. Will you use it to serve your master faithfully, loyally, without thinking about yourself, wholeheartedly, working 24 hours per day, working, helping the shareholder who you normally don't know who are they, to earn money for them? Or you will sometime after a while feel very tired and serve yourself. And you might think like, how can I use this money to also benefit myself a little bit? Because I work very hard for the company, how can I just take some salary? Should I have more? Correct or not? Do I just need to think about the shareholder? How about myself? So this is called a conflict of interest. Basically, he will be struggling inside him. Maybe in his mind he said, oh, I have to serve my master, which is my shareholder. But in his heart, sometimes he feel like he want to also maybe take care of himself on his financial needs. Correct or not? So after a while, it's not that everybody would turn like that, please don't misunderstood me. But then after a while, this shareholder will started to have doubt. Okay, the shareholder is the one that give money to the company. They will have a lot of doubt whether the director will loyally serve them or not. Okay, so how do they know whether the director will loyally serve them or not? So their confidence will drop. Confident on the director will drop. One day after one day, they will drop. Especially if the company lose money, their confidence drops some more, even more. Okay, correct now. Okay, so this financial statement that you submit to the shareholder read already. The shareholder don't know whether should he trust the financial statement or not. Should he trust all the things that the financial statement says is correct or not? And then of course the shareholder also have problem understanding the financial statement. What are you trying to say? All this number, where do you get? How do you calculate? Correct now. So who can actually help on the financial statement? Yeah, we have Aiden. Can you, Aiden?
Yes. Yes, may I ask,
Yes.
would the doubt, how to say, if the performance are like that, we earn money now,
yes,
would the shareholders still doubt the director, their loyalty, the director loyalty?
I think also.
Also, okay.
Because he will think, how come everybody is losing money and you are earning money? Are you doing something funny? Actually, shareholder consists of the public, people in the public. Okay, so this public, they, even if you earn a lot of money, they will sometimes also feel that maybe you should earn more. Is this profit? Did you actually also take some part of the profit already, or you have actually trying your best to help? Actually, over time, I think the confidence will definitely drop. Okay, because they cannot trust this person. Then one thing you need to bear in mind is they actually don't know each other. They are not friends. They maybe never met each other before. Correct now. You learn about this director from where? Maybe from the annual report, they got their profile. So you just read their profile only. But you maybe never talked to the director before. Okay, so you don't know what kind of person he is. Especially if this director have some bad rumors. Okay, or maybe he got some bad news. I mean, he did something wrong. The more so the shareholder will lost confidence in the director. So how to solve this problem? One of the method, of course, this method is not 100% can solve the method, can solve the issue. One of the method is to hire an outsider, okay, called the auditor. So since the shareholder cannot trust the financial statement prepared by the auditor, since the shareholder cannot trust the financial statement prepared by the director, so we ask a person who is from outside, who is fair, independent, okay, who have the qualification, okay. Normally auditor must be also an accountant. Auditor must also be MIA member. Okay, also you have to have all the qualification to become. So he is of course competent. Okay, he know all the accounting standard. he know how to read the financial statement. He know all the figures, how it come from, where it come from, how do you calculate it. Shareholder doesn't know. So we hire this guy, the auditor, to come in to check the financial statement. And then report back to the shareholder again that the financial statement that prepared by the director, they are correct. Okay, but they don't call it correct, they call it true and fair. True and fair. Because correct is such a big statement, I think too big to use. Because you say something is correct or wrong. The financial statement can never be correct, can never. Okay, because we know that we prepare the financial statement, we know the financial statement is full with estimates inside. Okay, we have depreciation is estimate, provision or estimate, revaluation are estimate, everything are estimate inside our financial statement. So our financial statement can never be correct if they are full with estimate inside. Okay, so we can maximum says that our financial statement are true and fair. So you ask this guy, you pay a lot of money to the auditor, which are you, okay, you are the young professional today. They pay a lot of money to your firm. Actually, it's really a lot of money, okay, to just buy confident. Okay, what is your company selling? You are not selling anything. You are just selling a confident. So to buy this confident, the shareholder actually pay a lot of money to buy it. Okay, so that lead to our topic today. If you are not seen to be independent, if people look at you and they think that you are not independent, after they pay you so much of money, and they look at you, like just now, Chia Yang also said, they don't have confidence in you, correct? So they don't get what they buy, you see. Shareholder, they don't get the confidence. You know, you can't measure confidence, right? Correct. So I hope that I pay the auditor this money, I can get the confidence. But then I look at the auditor, how he behave, then I don't get the confidence. So it's wasted. Okay. So Justin, we have a question from you.
Yeah. Miss, can I ask? Like, I agree your this I agree this auditor will add credibility to the financial statement, but in the current issue, everyone said that auditor is useless, then we should abolish statutory audit, right?
Yeah.
Like I think in listed company, this auditor should be useful, but in Malaysia, in small medium firm, usually the director and the shareholder is the same person, right?
Yes.
So the person that contribute the fund and the person that operate the company is the same one.
Yes.
So do you think auditor is very useless in SME in the industry?
Okay, so in Malaysia, if you want to get audited, you must be, a company that need to be audited is either Sendirian Berhad or Berhad. So if you are just a trading company or partnership, your company no need to get audited lah. Okay, so only if it is Sendirian Berhad or Berhad lah. So like Justin said just now, of course, Berhad company, we can see the value. How about Sendirian Berhad company that is like medium size lah, where the director is the boss? Then you don't have this issue, right? The director is this one. The shareholder is managing the company every day. So I don't have conflict of interest because me is me, my company is me, and everything is me. Then I take my money lah. Nobody will question anything. Okay,
yes.
But don't forget.
Yes, they think that the director think that they spend this money to do the audit is just for the compliance to the law only.
Correct. Okay, but you don't forget this group of people, which is the banker. Okay, unless the company doesn't have loan. Okay, if this company wanted to borrow money from the bank, okay, the bank also need to be protected, because in Sendirian Berhad company, if your company go bankrupt, your director doesn't go bankrupt, your boss doesn't go bankrupt, correct? No? So if this company actually, according to the law, is a legal entity. It's a person. Okay, wait. How come there's nothing? Okay. Anyway, maybe what I want to tell you is this company is a person. So you can use this company name to go to the bank and borrow money. So we need to take care of him as a person. So we need to make sure this company can pay the banker, can pay the supplier, because these are also people who contribute money inside. Correct. Now, of course, shareholder and director are the same, but then the banker won't lend money to a company that doesn't get audited. If your company doesn't get your account audited, right, the banker also don't want to lend money to you because they were worried that if, let's say, the company go bankrupt, then the banker will lose all the money, right? Because the director or the boss doesn't need to pay. Correct. So in order to take care of this group of people, we also like, unless the Senjuan Berhad company is very rich, they don't need loan. They don't want to borrow money. So normally this type of company is true, okay? They just do the account for compliance purpose. Maybe they just comply. For them, it's actually quite useless now. No benefit. That's why for this type of people, for this type of firm, it's very difficult for us to carry out the audit. I think your face also, your client doesn't value you, and they think that you are wasting their time. You go to their company, you want to do stock take, they show you one face, they say, why you are here, you take all the time but never contribute value, correct? Only one day it comes when they want to borrow money, then they will come to you. When they want to borrow money from the bank, then they will see your value. Then you become super important already on that time. Okay, so let's go back to our sorry, let me just save this. Inside here. Okay, I just save it. And I agree with Justin. What Justin says about the current issue now is that a lot of shareholders, they think that they are thinking about maybe don't want auditor already because they really pay a lot of money to the auditor, but then the auditor fail many times actually to save the company. Like maybe the director is committing some fraud, but the auditor failed to discover the fraud or the misstatement, failed to give warning on time, and then the company collapsed. So the shareholder will have a big question mark. Like, why do I pay so much money to this auditor, and then at the end this auditor doesn't sound any warning, doesn't tell me anything about the company, and my company just collapse, just go bankrupt like that. So this is really an issue that is faced by auditor now. Of course, there are these two group of people. The critics will keep on saying that it's useless auditing, but auditor actually have their value. It's not totally useless. Actually, there are many. As auditor now, you will see that our being existence, our existence, like we go to the company and show that I'm here today, that is actually enough to remind the director, don't try to fraud, because I can come in and check on you. Correct. Can you imagine one day there is no auditor at all? Then what will happen? Then the director will actually feel that okay, then I can do what I want. Correct. Okay, yeah, we have question from Aiden.
I mean, when we say a lot of money, like how lot? Is it really expensive to hire an auditor? The audit,
if a public listed company, it can go up to maybe 100,000. Big company.
Okay.
Yeah, it can go up to 100.
Just audit a year financial statement.
Yeah, just 1 year of financial statement.
Okay.
If it is just normal small firm, maybe it can be within 10,000. Just audit fee, okay? Okay, so why do we need an auditor? Now I think with the explanation, okay, it's basically the issue is this director. Can you look at my screen here? It says director sometimes may use the resources from the shareholder for personal gain. Okay, this is the one that we don't want. Very sensitive, correct? Director shouldn't take any money from the company unless it is authorized, okay, by the shareholder. So external auditor are being called in. Okay, so we are the professional, we are being called in to add credibility, to add the confidence, okay, on the financial statement. Actually, the financial statement is already prepared by a qualified accountant. Okay, the financial statement is prepared by a qualified MIA accountant. Okay, because if you are not a qualified accountant, you cannot prepare a financial statement. You cannot sign the account. Okay, the fact that you are already a professional, you prepared the financial statement, and yet shareholder doesn't believe. Okay, we ask another professional to come in to verify it, to add the credibility, okay, to the financial statement. And this actually whole thing only work very well, okay, in listed company in Malaysia, like all the Berhad company, like Justin says, okay, all the, like, especially those company who sell share in the public market, okay, those company are, you can see the value, okay, of auditor. Okay, then we go to today, our quality here. So then, why do auditor need independence so much? Okay. Maybe we go through here. It says audit is to provide opinion. Okay? Basically, they come to us to buy our opinion. So we look at the financial statement, then we express our opinion. Is the account okay or is the account not okay? They call it the true and fair. Is the account true and fair or not? Okay. So beneficial for stakeholder involved and take decision based on the financial statement. You know, many stakeholder, that means it's not just the shareholder, is okay, I highlight it. Actually, not only the shareholder will read our financial statement, is the stakeholder. Who are the stakeholder? Maybe tax authority. In Malaysia, we have our Lembaga Hasil Dalam Negeri. Okay, how do they know that the financial statement we prepare, the profit that we prepare are real profit? Because they are going to tax us based on the profit, correct now? So the government also want the financial statement to be checked again. So the stakeholder make the decision. Who else? Like just now I said, the banker. The banker, they want to lend money to us, right? Correct. How do they know that our company is really making profit? They need our financial statement to be double checked again to make sure we really make money. Then only they lend the money to us. That is the decision making. They want to make a decision whether they want to lend the money to us or not. Correct. How about supplier? Supplier, they will give us credit term, credit limit. Correct. So if how do they grant credit limit? How much credit limit? How much credit term to give us? Also, they look at the financial statement, whether it's making money or not, okay? Whether the P&L got profit or not. Okay, so they also request the financial statement to be double checked. Correct. They also don't want the company to manipulate the financial statement. So all these stakeholders, all these people actually in the market, we are taking care of them. We don't just take care of the shareholder. Of course, they are our primary audience, but we have many other audience that are looking at us, hoping that we can help them to see whether this document is correct or not. Because as you know, you also do some accounts before. As you know, accounts are very difficult to read, financial statement. It's not something that you can just see the figure and you can interpret, right? There are so many meaning behind the numbers. So our existence is to read them and tell them that the account's correct. Not everybody can read financial statement. Okay, so again, our existence is to add credibility. We sell this thing. So just now I asked you, if you are selling confident and people look at us, they cannot believe us because of how we look like. Okay, because we don't act independent, we act like a bit funny. Then how can they have confidence on us, right? Correct. You are not selling a stock. At the end, shareholder doesn't get anything. Correct. So at the end, if you don't give them the confidence they want, that's why they view us as useless, as auditor as useless. So it's very important for us to give them the confidence that they want. So how do we give them the confidence that they want? Is being independent. Okay. So the standard actually asks us to be independent in our mind, and also to be independent in our appearance. Okay, mind and also appearance. how to be independent in our mind. That means insight, okay, insight. So just now when you started your to introduce yourself, you tell me that being honesty are a very important quality. That is actually independence in your mind. That means you have decided that you wanted to do what is right. You have decided that. Okay, so inside you know that I don't want to be funny, because as an auditor I have this responsibility towards my public, towards the stakeholder. So I want to do the right thing. Okay, so that is insight. But of course, nobody can see what is inside our mind. Okay? For example, I can't see what Chia Yang is thinking now. Correct. Maybe Chia Yang is thinking, okay, so how can I not be independent? Okay, but let them see me as independent. But actually inside, I'm thinking of a lot of ways to cheat them, something like that. Okay, I don't know, correct? So it's not something that we can measure. Of course, a good auditor comes from the mind that you are actually wanted to be independent. Okay, but this is very difficult to measure. So this one, we can't really do anything because it's inside the mind, correct? But at least, can we be independent in appearance? Which one is more important? Wenqi, what do you think? Do you think inside is more important or outside is more important? Since you are selling confidence.
I think inside is more important.
Okay, actually, of course, inside is more important, but because we are selling confidence.
Oh, okay.
So I think outside is more important. Correct now, okay? Because what is in our mind? For example, maybe Justin, in his mind is like everything must be honest, integrity, independent. He opened a firm. He want all the staff to act independently because he know that is the most important thing to be an auditor. But those are in his mind. Can shareholder build confidence on that? Nobody. Cannot, right? He can't convince the shareholder what is in his mind, correct? Okay, but what he can do is appearance. We want to appear to the shareholder as important, as independence. Okay, so we will avoid circumstances. So we want to talk about the circumstances, okay, the threats that will make us doesn't look independence. Okay, when the shareholder look at us, they say, you see, this is my auditor. You see what my auditor is doing outside. When I go out and makan, I saw what he's doing. You see, can I trust him or not? He's like that one. Okay, so we also need to carry ourselves. So this one will help them to build the confidence in us. Is it okay? Okay, so like a lot of you say just now, Chia Yang also said about being confident in the decision. So this is called professional skepticism. Okay, one way to help them to build confidence in us is how we talk to them. Okay, so when we talk to them, we want to we don't appear like we are very best friend with the director. We don't call the director by nickname, correct now? Okay, and then we also don't so close to the director. We try to ask a lot of questions. Professional skepticism is kind of like we do the audit with a questioning mind. Okay, so when we express ourselves, okay, so that is where people also can see what kind of person we are.
It just means like the appearance is like what we add and deliver to the third party.
Yes, okay. The appearance is like what we do, yeah, what we do. Okay. Of course, the one that we are going to cover, those are very, professional appearance. We are talking about all those are professional appearance. But in reality, if you go to Big Four and you work in Big Four, actually Big Four, they also have a dress code. Okay, for them, dress code are very important because how you carry yourself. Okay, if you go to Big Four, I heard that you don't wear like flowery, like girl. Wear like flower dress, like very big, like so you have you seen auditor before? They are actually their grooming is actually quite dull one. They black and white. It's not that they like that. No? It's just that they don't want to attract the attention to their dressing. Okay, so when I talk to you, I want you to listen to what I say and not what I wear. Okay, so they wear the things that they wear is try to be professional, like minimize all the distraction and then appear to be professional. So if you go to Big Four and work, there is a set of dress code that you actually have to follow. Got any friends who work there? No, maybe next time you will meet some friends who work there, then you can ask them.
Miss, can I ask? Can you briefly explain? We always said that say this word, objectivity. What is the meaning of the objectivity in
fair?
here?
Fair. To
fair.
be fair.
Oh.
F-A-I-R. Fair.
In audit, objectivity is fair. Okay.
To be fair.
Okay.
They call it the definition. He says it's a state of mind. It's a state of mind, our mind, not to be influenced by anything. Okay, like to be fair lah, because like judge, they also have to be very objective. So when I look at the case, I look at the case only. So I don't listen to what you all say. I look at the case, I look at all the evidence, and then from there I judge according to the case and all the evidence. So auditors are supposed to be like that also. So like, let's say I have a case, I look at all the evidence, but then in my mind, I'm thinking about, that person is actually my mother. So can you be objective? Correct. My mother is like begging me not to expose all the misstatement. Then you will be thinking about like, oh, that's my mother is crying. Like you cannot be objective anymore because your situation has been, your state of mind is like influenced by an emotion already. Correct. Then you are not objective anymore. Okay. So in order to be objective, you must avoid the threats. All these threats. Are you okay? So maybe we can take a break. Okay, we take a break and then later we come back from the break. We can do the first threats. We can go to our first threats.
Okay.
Hi everybody, welcome back. How about our other participant? Are they here? Welcome back. And I think we have still Cheng Ming not here. Okay, so everybody is here. So let's start on identifying the threats. The threats. So the word threats is actually danger. So auditor, we see the threats, we want to run away. We don't want to go near to the threats. Okay, so there are many threats. So today in this training, we are just covering 5. Okay, 5 threats, and then there are 5 safeguards, the solution for the threats. So if you are already in danger, you already fall into the trap, then what can you do? That is a safeguard. But of course, the best thing is don't go into the danger. So when you see it, you avoid it. So the first one here is what we call financial interest. Okay, so the financial is money interest. So as an auditor, we don't want to have money interest in our client. What kind of money interest can we have on our client? For example, auditor shouldn't buy any share in the client. Auditor shouldn't buy client share. For example, your client is AirAsia Berhad. Okay, so auditor shouldn't buy the share in AirAsia Berhad. Okay, if you're auditing AirAsia and then you are the shareholder, can you imagine the complication in all your relationship now? Okay, you are the shareholder. Just now, do you remember the diagram that we draw? Okay, you are the shareholder. Now you are the auditor. You're supposed to audit the financial statement to report to the shareholder, and now you are also the shareholder. Correct not? So I think the relationship become very complicated. Can we not buy the share in AirAsia? Can we just buy the share in other company? Can in Malaysia, in this world, there are so many companies, right? There are so many investment that we can buy. So once you started to audit the client, usually the auditor will be asked to sell off the share if they have already bought them. Okay, so your company, your accounting company policy maybe is ask you to sell off, ask you to declare. Okay, but some auditor, they can keep the share in their client, can, unless the amount is very small, it's very immaterial. Okay, if not, then if the amount is quite big, normally we have to sell off the share before we start the audit. If we don't sell off, then we don't do the audit. Maybe we can ask to leave the audit team. Sorry, I can't join this audit team. I mean, you are in the audit firm, but you can request not to audit this client. Can I audit another client? Can. That is your financial statement. Auditor should not have any financial interest in the client. So why we cannot hold share in our client? Okay, the reason is because when you hold share in the client, every year, let's say you are the shareholder, what are you hoping from buying share as a shareholder? What are you hoping? So you want to try? If you buy share, what do you want actually as a return?
The share price can increase a lot.
Yeah,
and I can gain more.
Yes, you want the share price to go up, you want dividend. Dividend come from profit. So now you are the auditor also. Do you want the client to die? Do you want the company to die? Then your share price drop, then you know dividend. Are you going to expose all the misstatements so that all your profit will be gone? Profit gone, no dividend. Are you going to do the person who is going to pull down the performance of the company? It will affect you also, right? Because eventually it go back to you. You are the one that buying the share price. You are the one buying the share. You are the one that hoping for the dividend. And then the next morning you go to the office, you are the one that pull down the profit. You are the one that pull down the performance. At night you go back home, you hope that the share price will go up. Then early in the morning you go to office, you do the opposite, correct now? So that is actually a conflict of interest, correct now? You don't know what you are doing because you will be like torn in between. Should I take care of my pocket? My share price, my pocket, my money? Or should I go to the office and be an independent auditor? Correct. Okay. So again, do you remember just now we are talking about being seen as being seen. Okay. Do you know that if you buy a share in a company, if you buy a lot material enough, your name will be published in the annual report. Let's say top 20 shareholder, the top 20, your name will be there. So let's say to she buy like maybe 10%. It's a lot already, 10%. Maybe sometimes it's not to a buy, sometimes maybe to a grandfather. Before maybe he passed away, maybe he transferred the share to Zua. Then Zua got a lot of share from the family maybe. Okay. And then her name will be there. Okay. Publicly, you are trying to tell people you appear to have financial interest. Okay. So everybody know that you are the auditor, and at the same time, everybody know that you hold share in the company. Then it looks very, very bad on the auditor in this situation. Okay, so you of course in your mind also you cannot be objective anymore. You cannot be independent. So can we avoid all this financial situation when next time when you have any share you want to maybe tell your audit manager, okay, these are the shareholding I have, I declare first. Okay, in audit firm, sometimes when you go maybe to Big Four, okay, before you start the employment, maybe they ask you to declare first. Declare all the holding of share that you have. Do you have any holding on share in any company? So maybe every year they will ask you to do this. Did you buy any new share in any company? You declare first. Okay. So if they see that you have share in Asia, maybe they don't put you to audit Asia. Okay, they put you to other team. In Big Four, normally there are many audit teams. So in your company, maybe I believe you have like maybe 4 teams, right? Correct now. So maybe you can go to the second team. Is it okay? So this is one of the threats. Is there any question?
Still okay, temporary now.
If you just now you say 10% the top 20 shareholder will only be published in the financial statement, then if we buy a little bit,
not all not all. Some if you buy like maybe 1%, just a little bit, then your name will not be there
so no conflict already, right?
Yeah, got.
Got.
It's just that if you buy a lot, too obvious, right? Correct now. So if you buy a little bit, of course, if you don't say, nobody know. Correct. Okay. But there will be an issue like this. So let's say if nothing happened, nobody know nothing happened. Correct. But then if let's say the client go into some situation and then the shareholder started to sue you, and then the evidence got is you actually hold some share in the company, then you get into trouble at that time. When they wanted to sue the auditor, they will try to find your fault, right? Correct now. And then this is where they will look for you. They will know that you hold some share in the company. Then you cannot justify yourself when you go to the court. Correct now. Justin, is it okay? So if you don't want to get into trouble like that, better to just sell off because we can have many other choice, right? We cannot audit the company. We can just sell it off. Correct. Okay, rather than put ourselves in this situation.
Is how about that our family member that having a share of the company?
Okay, it's actually immediate family also not supposed to have immediate.
Okay.
So it's the one that stay together with you. Okay. If it is your grandpa, grandma, then it's okay. Auntie, uncle, okay. But then like if your wife, your parents, your children, if they have it, it's equals to you have it. Because it's the same one. If your wife has it, then it's your money also, right? You take care of your wife's money, correct?
But girlfriend also same, right?
Girlfriend, because girlfriend there is no legal document, right? Correct. So if they wanted to carry out a litigation against you, if like girlfriend is also difficult, girlfriend will be considered friend. That one okay. Okay, but wife is there is a legal document, correct? So you know lawyer can actually put you into a difficult situation.
Miss, can we buy the share after we done the audit? Like I saw the revenue very high, then I want to purchase. I want to buy the share.
But normally next year you will go back and audit, right? So in between you are also consider the actually the audit engagement doesn't end when the audit ends. The audit engagement is supposed to be the whole year, unless next year you don't participate. But the whole year, actually, there is auditing going on. The auditing is not just the 2 weeks. Okay, let's say you go in and you audit 2 weeks, because that is actually the peak. But actually, the whole engagement, the work that you do on the company is the whole year. Unless you don't go in, next year you don't go in. Okay. And then, okay, just now you mentioned about when after you audit the company, then you see that his performance is very good. Then after that, you decide to go and buy the share. That is worse, because that is actually called, you also violated something, okay? Because that is actually you use the information you get from the audit for your personal gain. Okay, because when we are doing the audit, we will look at all the information in the company, even all the P&C things. The client cannot hold back. They have to let you see if you wanted to see. So all their budget, all their plan in the future. Let's say your client, he has a very big plan. Okay, his plan is maybe to build something very massive. And you know the plan is going to be very successful when they launch it. Correct or not? You know that once they launch it, they will be very famous. So, and then the share price will go up. You know that it will happen. And then you quickly go and buy the share price. That means you are using all the information you get from the audit work, from the audit client, for your personal gain. That's even worse, worse than this situation. You're not supposed to do like that. You're not supposed to use whatever you know from the audit for personal gain. And then let's say if you earn money from there. Okay, but of course, if nothing happened, then this case just closed. But one day, if something happened and the shareholder wanted to sue the auditor and all these things will surface, what you have done, because it's all recorded black and white. You have buy the share, you have the gain when you sell off the share. Okay, all the money go into your account, and then all this will be used against you. Okay, another situation that we try to avoid is this. Is we don't want to lend money to our client, or we don't want to borrow money from our client also. Okay, we don't want to have any money relationship with our client, basically. So then a lot of participants will ask, then how about if my client is a bank, Maybank? Does it mean that I have to stop all my loan with Maybank? What if I have a lot of loan with Maybank already? Then I go and audit Maybank. Okay. Okay, actually, you no need to stop the loan, not like share. Share, you have to stop the share by selling off the share. But loan, let's say you have your mortgage, your house mortgage or your car mortgage with Maybank, and then now Maybank become your client. Number one, you can decide, maybe I don't want to participate. But everybody in Malaysia also got loan with Maybank, right? I think, correct. We also have some saving in Maybank, right? Correct, because it's a very big bank. So normally we have some financial interest with the bank. Okay, then what you have to do is you have to make sure that the loan that you have with Maybank must be ordinary cost. Must be normal business term. Okay, you must make sure that the loan agreement is signed before you started the audit engagement, and then the interest there is market interest. The loan term is market loan term. That means no special treatment for the auditor. What we don't want is Maybank lend money to auditor, got special term, like lower interest, longer repayment period. Okay, all those we don't want, because that is like bribery. Give you special benefit. Okay, let's say you audit Samsung. Can you buy Samsung phone? What do you think?
Can.
But no discount. Okay?
Wow.
You cannot get discount. You cannot get staff price. You cannot be like happy, oh, today I'm going to audit Samsung, so I go into the client and ask them if I buy got cheaper. Not supposed to be like that, because the more so you want to buy at market price, the more so you don't want any discount. What if the client say, hey, you come in as an auditor, I give you cheaper. Other people 5%, I give you 20% discount. You take staff price. These have to be rejected, because this is actually the same as bribery. Okay, so this loan here will be same. We can borrow loan, we can buy loan from our client, just like we buy Samsung phone, we can. but it must be normal market price. Everything must be normal market, cannot be special discount.
It means, but even though that those clients that already know that like this considered as a bribery, but they will still do.
Yeah, the client will do, because the client want you to help them with the financial statement.
Oh.
They want you to help them because maybe there are certain parts in the financial statement they need your help. Okay, normally it's like things that like maybe some estimate lah, maybe they estimate a bit higher. Then
Okay.
it's not wrong, but then a bit higher than market, just a bit higher only. Okay. So Aiden can decide it's just a little bit higher. It estimate estimate anyway is wrong. So you estimate a bit higher, I can accept. Okay. Then some people would think no, because this is actually wrong. Okay. So depends on the auditor. Maybe they need help is in this area.
I mean, how about if the auditor audit that this financial statement is wrong, they will ask them to re-prepare the financial statement again.
Yes, they won't straight away qualify. Qualified means say the account is wrong. The auditor won't do like that. As long as the client willing to change, then we will still give them true and fair.
Okay.
Okay, so we won't give them true and fair if there is a disagreement, like I ask you to change, also you don't want to change. You insist you don't want to change. And then I got no choice. I also insist I want you to change. Then there will be then only we qualified them. Qualified means we give them the bad report.
Some accountant also will argue with the auditor, right?
They argue, but then if they are willing to come to a conclusion, because when they fight that time, they fight normal because they angry, but tomorrow they will have to cool down correct, and then come to a solution. Normally they come to a solution. Is it okay? Because if you state that the financial statement is true and fair, it's a very serious thing. You publish it, then that's all. Okay, that's all. The shareholder will just sell off the share. The share price can drop like 50%. Immediately, one day, it will drop 50%. You look at a company like actually if next time maybe if I got a chance, I share with you some company like Tesco. There is one time that the auditor also said that the financial statement is not true and fair. Then the share price also drop a lot. Okay, so let's come back to this loan. We are talking about this loan. So why is it a threat? Why we cannot borrow money from our client? Because if the client lend us money, the client will have a feeling that I'm the boss. Auditor, you must listen to me. Auditor, you are poor, you don't have money. I lend money to you. You don't want to listen to me, then pay back all your loan. Correct now. So the client might have that kind of impression on the auditor. The auditor might be like inferior. Oh, if I don't help my client, then my client will ask me to pay back all the money. I don't have money to pay back to them. If I pay back all the money, I have to close my shop. Correct now. So under that kind of situation, if you are pressure like that, if your client pressure you like that, okay, if you don't help them, they ask you to pay back all the loan, then you are no longer objective, correct? You no longer can view the material and then be fair on the material, because behind your mind, you will be thinking, I also need to eat, correct? I also need to pay my bills and my rental. So if I don't have the loan, I have to pay back, then how can I survive? Maybe I can help the client for this time. Okay, maybe you won't be objective anymore. Okay. Is it okay? Okay, we go to the third situation, the third threats. Okay, auditor is also not supposed to have one very big client. Okay, maybe this one I need to draw for you, then it will be easier for you to see. Give me 1 minute to open this paper. Okay, this is your audit firm. This audit firm. Audit firm, there are many clients, many customers. Client is their customer. You cannot have one customer that is very big one, and then the rest very small. If you have one customer that is very big, you over rely on this customer. In practice, we use the 10% rules. Okay, so this client cannot give you more than 10% of your total income, of the audit firm total income. If this client contribute more than 10% of the total income, then this client is considered too big for the audit firm. That's why in practice, if you work in small audit firm, you get small client. You work in medium audit firm, you get medium client. You work in big audit firm, you get big client. Big client cannot go to small audit firm. You cannot be like that. Audit firm. Sorry, this is client. This is audit firm. Audit firm very small, client very big. Then this client will have to give a lot of money. Audit fee will be too big because he got many things to audit. His account very big. So the audit fee will be more than 10% because the firm very small only. Total income very small. This relationship doesn't exist in practice. We cannot do like that. So normally cannot exceed 10%. Are you okay? That is called over-reliance. Why cannot? Okay, if you have one customer of course is like king, correct? Everybody will treat their customer very well. If you've got one client that is super big, that means this customer become very important customer, your most important customer. How do you treat your most important customer? You very scared they will run away, right? You very scared they will leave you, because they leave you, you lost a lot of income. If just 10% is okay, I don't mind to lose the income. But if this client contribute 50% of your total income, can you afford to lose a client that contribute 50% of total income? You cannot afford, right? Because if you go, then 50% of your income is gone. Then you don't have enough money to pay your rental and all your expenses, correct? Then you will fear the client. The client say, if you don't want to give me a good report, then I will leave you, I go other auditor. Correct? Other auditor will give me a good report. You don't want to give, right? You don't want to listen, you don't want to help me, right? Then it's okay. Next year, I won't engage you anymore. Correct? So you fear of losing the client because the client is too important for you. So if you keep at 10%, then you won't put yourself in danger, because 10%, if you want to go, you just go. I still got 90%. I won't go bankrupt if you leave me. Correct now. So auditor can be independent like that.
So audit firm has the right to reject their client.
Can reject. Of course, they are just like customer.
Even though they can let them earn a lot of money, they still want to reject, right?
Of course, difficult to reject, right?
But no choice.
No choice, yeah. No choice. Yeah, right. So if you take, everybody would know what. Hey, how come the audit firm so small but can take such a big client? Can see doesn't match, right? Correct, in the market. Okay, that's why now the current issue, I don't know whether you read about this issue. Big Four only got four companies only. But in this world, got how many big corporations? How many big companies in this world? Many, right? But they only can find 4 auditors only. So this 4 auditor already full, like cannot accept client already because they very, very full already. Can this big company, big client go to medium auditor? Cannot. They cannot go to medium auditor because medium auditor, medium firm cannot digest such a big meal, cannot digest such a big income. Only big 4 can digest. No choice. They have to queue up for auditor. So auditor is like very powerful, especially the big 4. They have a lot of says. If the client behave a bit funny, they don't want the client. Then the client nowhere to go. Very scared, right? Nowhere to go because no other big 4 maybe can take them. So this is what the client is actually worrying now. They think that big 4 is having too much authority in the market. They hope to create a big 5 soon or big 6. But many years already, still no news. Still big 4, I don't know. Okay, there's a lot of issue that they cannot do. So that's why. If next time you all got a chance, so I hope you all can consider thinking about maybe because if you want more exposure, so all those auditors that need more exposure, they actually have to, better for them to go into big 4. Then they will see big client. Correct. Then your exposure is bigger when you are exposed to big company. You can learn the big system, how the big company operate their system. Okay. Are you okay?
Okay, thank you.
Next one is this one. Okay, maybe you also heard about audit firm. Audit firm doesn't just do auditing. They actually do many non-audit service. Okay, that means you think audit firm must only do auditing, right? Actually, that's not true. If you go to big 4 website, their non-audit service is actually more than their audit service. And if you look at their accounts, non-audit service earn more money than audit service. So non-audit service nowadays has become even more important for audit firm. So audit firm rely a lot on non-audit service. What kind of non-audit service? For example, audit firm also can help you to do valuation, help you to do financial analysis, help you to analyze which investment is good, which investment you want to buy, can help you to do internal audit, help you to do maybe recruitment. They even do professional recruitment. They can be your agent. They can help you to do research on market. Can anything related to business. Can whatever report analysis you need to do, you don't know how to do, you can ask your audit firm to help you to do. They provide many other service to their client. Okay. Actually, this is not good. Audit firm provides so many other service is not good. Why is it not? Right? Because it will create a lot of self-review. Maybe I draw this. You know, some audit firm even give accounting service. Means I help you to prepare account, then I help you to do audit. Because the client doesn't know how to prepare account. Client maybe just medium firm, okay? Maybe just medium size, Senjuan Berhad, small company. So doesn't know how to prepare account. So ask auditor, you settle everything. I heard one of my students say, his firm is like one dragon. He said something like that. You know, one dragon in Chinese. Means provide the service from beginning until the end. Everything, secretary service, accounting service, auditing service, all the compliance. Okay? I will settle everything for you. Don't worry, just pay money only. Correct. So your financial statement, if the auditor contribute a lot of things on the figure here, for example, auditor do valuation, can go and do revaluation, go and become a valuer, can auditor do internal control, auditor also do tax consultant, he also do the tax, so the tax also calculated by the auditor. And worse is auditor also prepare the account, And then at the end, auditor come in, let me audit. Don't you think it's very funny?
In SMB 01 Dragon 1. Secretary, tax, audit, accountant.
But normally it's different team lah. That's their safeguard.
The company name is different, but boss is same.
Same, yeah, true. Actually, this is a debate until today lah. Okay, until today, you cannot ask them don't provide, because the auditor will tell you if I don't provide this, all this, not all this service, then just relying on audit itself, the auditor will have to close shop lah. Not enough. Okay. And then audit service is not the main income lah. The money they say is not a lot. And always gonna sue one, correct? Who want to become auditor? But all these other service is the premium one. Is the one that nobody sue me for valuation, right? Correct now. But then I can charge a lot, correct now, because the price is good. So you cannot tell audit firm don't do non-audit service. You can't tell them like that. Okay. They have to do it, they say. But that is actually a threat. Okay. If auditor does too much, like all this, more than this one, okay, then you will create a threat called self-review. Self-review. Okay, we go back to why it cannot. Okay. You will create a self-review. That means you review yourself. I prepare the account. A lot of things inside the account is prepared by me, is my figure, and then I audit my own figures. You will have problem like that. Then will you point out your own errors? Will you say, okay, I do the revaluation, and then now I'm the auditor, I come in, hey, your valuation is a bit too high. Will you say something to yourself like that? Your client will scold you, right? Hey, the valuation is done by you, and then now you tell me the valuation is not correct. So you create a lot of self-review, like for example, you create the test paper and then you mark the test paper. Correct? You are the person who's taking the test, and you are also the marker. Then of course you will mark yourself all correct, right? You won't be willing to expose your own mistake, correct? In your financial statement. That is the reason why if you prepare so many non-audit service, at the end you defeat the purpose of audit. You forgot already, why do you need auditor? And then that's why people think that auditing is useless. Because all this reason, then the client also, they will know, correct? Client will say, how come you prepare all these things, and then at the end, you come and audit these things, and then why do you charge me 2 times? First time you give me a valuation report, you already charge me a few thousand there, and then after that you come in and you say you want to audit the valuation, and then you charge me a few thousand again. Maybe you are the same person, what? Correct now. That is where we got problem. Aiden, you have question just now?
Oh, I mean, when they done so many non-audit service, so the auditor will tend like, I don't need to do any audit, I don't need to do audit anymore, right? Just give a true and fair.
Yes, but they have to pretend they do, right? Because audit, you need to gather evidence. So if got people sue you, you have to back up with your evidence, correct? So they pretend they do, but they know that in their heart they are not going to they are not going to qualify any of the number. They are not going to say the number is wrong. It just has a show like that, correct? That's where the audit becomes useless. It's really useless like that, correct? It's really for compliance purpose. Is it okay? Cheng Ming, are you still okay?
Okay.
Cheng Ming?
Yeah, yes.
Okay, the last one, the last thread will be this family relationship. So just now, I think Chayang asked this question. But if your share is family, okay, this is a little bit like the share, but different. This is talking about auditor cannot audit their own family member. For example, your father company, you are the auditor, can you audit your father company? Cannot, because family relationship. This is immediate family, must stay together in the house. Right? Are you okay? So parents or children, wife, spouse, can. So we cannot audit our family member. I cannot audit my wife. My wife is a director, and then I go and audit my wife. Why cannot? Of course, you can imagine why cannot, right? Because that is your family member. How can you be objective when you wanted to deal with your family member? What if, let's say, your wife actually commit a fraud? What if your wife do something funny to the financial statement? Are you going to catch your wife? Tell to the whole world your wife is the stealer, is the thief? Difficult, right? Because of the relationship. So what should you do if you have family member in the client? You try to excuse yourself, like you say, I don't want to audit. Okay, but your family member must be the one that's preparing the account. Let's say your wife is a cleaner in Asia, correct now? You want to audit Asia, but then your wife is working there and then your wife is a cleaner. Can you audit Asia? Can. I think can, because he doesn't prepare the financial statement, correct now? So the family must be involved in the decision making and also must be involved in the preparing the financial statement. Then it's considered a threat we want to avoid. Okay, so let's go to the safeguard. Safeguard is like, what is the solution? Sometimes we have no choice. Certain threats we cannot avoid. For example, non-audit service. Non-audit service is a threat that I cannot say no, because I also need to take care of my rice bowl like that. I need to take care of my income. So I have to provide non-audit service. But then we can have safeguard. Or sometimes is this family relationship also involve, like just now you asked me, like close friend. You are very close with the client. Okay. Like maybe you and your client always go out holiday, go golf, go eating together, like best friend already, buddy already. Okay. Then how? Because of the relationship, okay, then you still auditing him. Okay, so we can use some safeguard to minimize the threats. For example, let's try this one. First one. Okay, let's say we set the audit tenure to limit 5 years. That means every 5 years we change auditor. Now in practice, it's not like that. Auditor and client can be engaged together for 20 years. Right? They never change auditor because they like for example, I use PwC, right? I can use PwC for 20 years. I don't want to change because Big Four very difficult to get the auditor. So since I already so good with PwC, then every year no problem. PwC also like me. I don't want to change auditor. But that is not good because if 20 years you use the same auditor, it's kind of like you build a very strong relationship already. Become very close, like family relationship, like your best buddy. So very difficult to audit your best buddy. Okay. So the safeguard, the solution nowadays, the shareholder is asking us, can auditor limit the audit term, like every 5 years we change like that, like election. Like prime minister, prime minister, they need to change, right? Correct. Now, from time to time, they have why do they need to change the prime minister? Also because of all this close relationship. Because once you are in that position for so long, so sometimes it's very difficult for you to be independent, to be objective, to do your work well. So they need to change. Every 5 years, they change like that. Same. Can we change our auditor? Got advantages and disadvantages if you do this. Okay, the advantages, of course, is you won't build any very strong relationship with your client now. Okay, then you don't have independent issue. But then the disadvantages will be once you change auditor, the new auditor come in, right, have to relearn. They have to learn again. Learning process need a long time. Okay, first year audit always more expensive. Right? Because the audit time very high because they need to learn about the company. Then the subsequent audit will be cheaper, okay, because they already learn they familiarize. So every 5 years, if you change, then you have this issue, always have to relearn and relearn. Okay. So actually the Big Four, if they wanted to do, I think the Big Four, they can swap. Every 5 years, we swap our client. My client I give to you, your client you pass to the third company, the company pass to the fourth company. We change our client every 5 years. And then later one round go back to me. And then we don't have all this close relationship with the client. We will avoid the trend. Nobody wanted to do. until now, this is just a theory, okay? Suggestion, shareholder is pushing for it, but then auditor doesn't want to do it because like I say, the disadvantages, they don't want to restart. Or if you don't want to do the softer one, another solution which is easier is we don't rotate the audit firm, we don't change the audit firm. How about we change auditor? Inside one audit firm, there are many auditors. Like Big Four, right? Audit firm, maybe inside there are many auditors inside, maybe about 20 partner, 20 auditor inside. Every 5 years, we change auditor. We don't change the audit firm, but we change the auditor so that they don't build a close relationship. This is actually more practical. A lot of firm is doing. Okay, Big Four maybe is taking the lead. They're actually doing. They change the auditor every 5 years, so that the new auditor won't always very buddy with the client, with the director. Every 5 years, I change them. But again, the disadvantages is new auditor also need to learn. So the relearn process, maybe they cannot identify the fraud. Let's say when they change to a new auditor still blur, maybe have to blur 2 years. Okay. Then the 2 years, let's say got fraud, then maybe they fail to detect. That is the disadvantages. Yes, Aiden?
But they can the current auditor ask opinion or their experience from the previous auditor?
Can.
There
is a process called professional clearance. So if I'm the auditor, the new auditor can write to the old auditor, previous auditor, and ask him what he need to take note like that. There is such a passing over of things. You can.
Okay.
Actually, in fact, it is a compulsory things to do. When you change auditor, you have to do a professional clearance. Okay, another solution they are talking about is second review. What is this second review? Maybe I draw here again. Maybe you can look at here. What is the second review? Okay, this is the audit firm. Audit firm give opinion on the financial statement. But because auditor get involved in certain tracks, so shareholder no confidence. Okay, because maybe he involved in family close relationship, or maybe some friendship with the client, or maybe he provide not on the service. So people is questioning the opinion. So what this firm can do is they can ask another firm to come and check. Second checking, another auditor to check on the audit opinion. So you have like 2 layers of checking. The financial statement prepared already, first auditor audit already, then the shareholder say, I don't trust you. Then you got the second auditor come in and audit the first auditor opinion to see whether the opinion is correct or not. Of course, this second review is very expensive. Ask so many people to audit. Correct. Who want to bear the money? Who is going to pay? That's the question, right? Will you ask shareholder to pay? Shareholder will scold you, right? Okay. Ask auditor to pay? Depends. Auditor have to bear the cost, or the client have to bear the cost. This is called a second review. You can anytime ask for a second review. Do you remember the case in what is the company name? Recently there is the case Sabah Dynamic. Have you heard about the case? The first time the auditor checked the item, I think it's EY is the first auditor, and then they I think EY is the first one. Then after that, the director disagree, right? Then they ask the second one to come in. I think Deloitte is the second one to come in and we check the figures again. Correct now. And then Deloitte also say the figure not okay. So yeah, I think it goes into some kind of case. I cannot remember at the end how they close it. Okay. Actually, I have the case. Maybe next time I can show with you, I can share with you. But it's very common like that. They ask for a second review.
Miss, can you share the case to us later time?
Yeah, can. I actually got a lot of current issue case.
Where you find so many current issue case? Where
It's
you
like
find?
sometimes when I read it, then I will save it lah. Like to be shared with you all. Okay. So especially those company that you know in Malaysia, then I will share, I will save it. Okay, so next one is how about another solution? Actually, this is the one that shareholder keep asking. Can you reduce your non-audit service? Audit firm, please reduce your non-audit service. Don't give so much of non-audit service. Focus back on what you are doing, because the main thing about auditing is the auditing service, right? Can we go back to the main thing, the auditing? But auditor don't want. They keep on sidetrack. They sidetrack to non-audit service. If you go to Big Four, they actually did the safeguard quite well. They actually have 2 offices. Yeah, they have same boss, but 2 offices. So the non-audit service staff and the audit service staff may be in 2 different offices.
But the company name will be the same or different company name?
They can be different company name, but park under the same boss lah. Correct. We know they are actually the same boss. We know they are actually Big Four. Can maybe we know is maybe EY or auditing, and then maybe another one is EY other service, something like that. Can. Have you been to Deloitte in JB? If you go to their office, I think if you go to their floor, it's like the auditing floor, and then they got non-audit service, other service floor. Okay, so they separate it so that you don't have self-review problem lah, because it will be prepared by 2 different teams. Okay, another one, last safeguard is audit committee. Who is this audit committee? Maybe you learn maybe from your company, your client, if they are public listed company, they will have an audit committee. Audit committee consists of non-executive director, like independent director from outside. So if you have any issue, auditor, if you got any threats issue, you can inform the audit committee. They are kind of like your helper, like that, help desk. So you can actually ask them to help you to maintain your independence. Okay. But to call this audit committee to come in, the process is actually very formal. Okay? You can't just call the audit committee to come in. You have to ask secretary, not the normal secretary, is your company secretary, to have a formal invitation to ask them to come in and have a meeting. And it will be all recorded in the annual report. Okay? So, but audit committee definitely can help auditor to keep their balance. If they cannot, then audit committee can help them. Okay. Yeah, Aiden.
It means we can see the slide.
Oh, sorry.
Okay, thank you.
Yeah, this is the sorry, I changed it back. This is the audit committee. Audit committee is kind of like a helper for auditor. Audit committee, they are independents. Okay, so they will be there to help the auditor when auditor face certain situation. For example, if auditor they give a lot of non-audit service, too much, then the audit committee can actually advise them to maybe let go some non-audit service. Or maybe if let's say there is some family relationship there with the client, and then maybe audit committee can suggest what can be done. So this is where auditor can go to ask their opinion. Are you okay? Okay, so maybe we can just do a quick case study here. Okay, maybe case study we leave it to the end. Okay, we will have a small activity. Let's do a quiz, on what we have covered today. Maybe we do a quiz first. Okay, then later we can do the case study.
Okay.
Okay, so before we do the quiz, maybe we just summarize this content that we have learned. What is auditing? Okay, I let you watch a small clip or the video clip. Then we can do the quiz. I can see YouTube here. Can see, right?
Can.
Okay, so this video will summarize what does an auditor do. And
have you ever wondered what an auditor does? Their work is largely in the background, but it's really important in maintaining But the auditor will also look at what we call sensitive expenditure, the controls over the spending that might be seen as having a personal benefit. The auditor will take a number in the financial statements and track it right back, testing where that number came from and how it was arrived at, including any systems, judgments, and evidence that support it, so that any of us reading the annual report can rely on that information. This is called providing assurance. Someone totally independent, the auditor, is given confidence in the information that the organization is reporting in its annual report. Auditors often also look at information describing what the organization has done with the money it was given. They check that the organization's reporting on its performance can be relied on. In the public sector, the audit can focus on the performance information as well as the financial statements, and it's a really important independent check on the information that's being reported. It helps New Zealanders have trust and confidence in the services that we're paying for through our taxes and our rates. Auditors also help the organisation by highlighting where to make improvements. For more information, visit.
I'm so sorry, just now I think at the beginning you can't hear, right? Maybe I can just play it again for you. So sorry.
Okay.
Have you ever wondered what an auditor does? Their work is largely in the background, but it's really important in maintaining trust and confidence in our public sector. Every public organisation, such as government agencies, councils, schools, district health boards, and the military, has a particular job to do and is funded to do it. That money comes mainly from the taxes and rates that New Zealanders pay. The main way we get to know what an organisation has done each year with its money and other resources is to read its annual report. How can we know whether we can trust what it tells us in that annual report? That's where the audit comes in. An auditor will check the information in the annual report. They're trained to make judgments. The auditor will learn enough about how the organisation works to decide on the most important information to look at. Usually, that means looking at where the most money gets spent. But the auditor will also look at what we call sensitive expenditure, the controls over the spending that might be seen as having a personal benefit. The auditor will take a number in the financial statements and track it right back, testing where that number came from and how it was arrived at, including any systems, judgments, and evidence that support it, so that any of us reading the annual report can rely on that information. This is called providing assurance. Someone totally independent, the auditor, is given confidence in the information that the organization is reporting in its annual report. Auditors often also look at information describing what the organization has done with the money it was given. They check that the organization's reporting on its performance can be relied on. In the public sector, the audit can focus on the performance information as well as the financial statements, and it's a really important independent check on the information that's being reported. It helps New Zealanders have trust and confidence in the services that we're paying for through our taxes and our rents. Auditors also help the organisation by highlighting where to make improvements. For more information, visit.
Okay, so that is the video that explain what does auditor do.
This video is related to the government auditor, right?
Yes. Okay.
Not for business one.
Yeah, but then the concept is on assurance lah. It's the same. This is New Zealand, the government. So wait, I do a Kahoot login. Okay, let's move on to some. Let's recall all the information. Then we can just do this quiz here. Give me a minute now.
Okay.
Yeah, I cannot find the file.
You mean something went missing?
Okay, give me a few minutes. Maybe we can just take a short break. Okay, 5 minutes break, and then we come back, then we will start.
Okay, no problem.
Okay, so I think because of some technical issue, we will do the Kahoot quiz later. Okay, so maybe we go back and do the case study. This is the case study. So what I want you all to help me to do is we split our participant today into 2 groups. So 3 person will be in a group. Maybe I can do the split now. How about we have Aiden, Chiayang, and maybe Wenqi in one group. So two boys and a girls. And then the other 3 will be Justin, Qingming, and Zu'er will be in another group. Okay, so you look at this case here. Maybe one person present, just one person. You can actually put it into PowerPoint. Okay, your answer, you can just create a very simple PowerPoint, and then later I pass the host to you, and then you can do your presentation. This is the case. Okay, what I want you to do is, can you please identify the threats here? In this situation, can you imagine you are the auditor, and then you face with this situation, and then what is the threats here? And then number 2 is why is it a threat? And then number 3 is what safeguard you suggest to do. So there are 3 things. The first one is what is the threats. The second will be why is it a threat? And the third one is the safeguard. What is the solution that you want to do to solve the issue? Okay, maybe I will just write down. The first one, can you identify the threats? The second is why is it a threat? Number 3 is, can you suggest a safeguard? Okay, you can present it into PowerPoint. Maybe we take about 15 minutes. Okay, we try to do it, then we can present. I put you into a breakout room, and then you from the breakout room you all can discuss.
Okay.
So Aiden and Wenqi and Chiayang, right? Okay. For the other room, Qingming, Justin, and Zu'er. Can you go to your own breakout room? Hi, welcome back.
Hi. Miss, we need to send you the PPT in the chat room.
Okay, hang on. Can I maybe let you? Okay, okay. Can I know who is Aiden?
Justin.
Justin. Okay, Justin, and then the other group.
Aiden.
Aiden. Okay, so we got Aiden group. And Justin. Sorry.
Really, Aiden and Justin only, right?
Sorry.
No, nothing.
I'm so sorry.
Wait, share screen. Okay, then one participant can share at a time. So I think maybe we let Aiden group do first. Is it okay? We invite Aiden group first. Aiden, can you share screen? Can you try?
Miss Chayang share screen.
Oh, Shayang was square. Yeah, he already square. So let's start with Aiden group.
Okay, let me go back to the question first. Okay, where's the question? Yeah, okay. So good afternoon to Miss Natalie. So I'm going to, sorry, our group member we have, which is me, Kang Jiawei, you can call me Aiden, and then Song Chayang, and also Teo Wen Chi. So based on the scenario that Miss Natalie just shared with me just now, I going to bring out the view of mine. So first, they say that client O is a large listed company that engages specialists from KBDE to devise the valuation for tangible asset, intangible asset. So now we can see that the company, like the audit firm company, involve too many services, like the non-audit service. Non-audit service actually there are many services like valuation. They also can be prepare the financial statement. Also the accountant. So this is also grouped as a non-audit service. So however, the KBDE firm also audit the client O company. So this involve like the trade of the company, there's non-auditing services involved. Because the first the company audit and do the valuation of the intangible asset. After that, they audit the firm. Sorry, excuse me.
No problem.
The audit firm. So why is that? Oh my God. I forgot those I have prepared.
Oh, no problem. You can move on.
They also
No, you can move on to the next one.
Yes, so there's a trade of the audit firm. So next, why is that? Because KBD might not they might not check their sorry, because they already all the financial statement they done by the KBD before, so they will not check. They will not like double check their work,
Yes.
their own work like that, because this might exposure their performance first, because they will not tell anyone that they actually have do their mistake, even though there's no mistake at all.
Yeah. Like
so
self-review, they review their own work.
Yeah, there's a self-review problem now. So what's a safeguard? Next. The safeguard for this one, actually there's two. The first one is second review, and the second one is audit committee. So let's talk about the audit committee first. Actually, audit committee is actually the committee that from the organization board of director. So this kind of committee, they actually they monitor the financial reporting process, and also they select their independent auditor to do the audit job. So this can ensure that the audit work which is qualified as a true and fair, because there's a committee keep monitoring their auditor job.
Yes.
So the second review, which is if the first audit which is not qualified as a true and fair, and the director might doubt the financial statement, so they can ask for the second party to do the second layer of audit job.
Yes.
But this might take some cost lah. So I think the director had to pay the cost because he's the one, he or she is the one to ask to do the second layer of the audit job. So yeah, so this is the trick. And why is that the why is, which is the self-review, and the safeguard is the second review and the audit committee. So these are our brief presentation. And sorry, I'm very nervous.
Thank you, Aiden. Thank you very much. You present very well. We give Aiden a clap. Okay, so let's go to Justin Group. Okay, Justin, can you do your presentation? Who is going to share the screen? Is it Justin sharing the screen? Justin, you need to unmute yourself. Huh?
Oh, sorry.
Oh.
Jamming, you share the slide, right?
Okay, can I share?
I think Adam already discussed all the things.
It's okay because it's actually the same answer. I mean, there is only one answer, right? So participant, of course, can state the same. I mean, the answer will be the same. Is fine.
Sorry, Justin, can you share the screen because this laptop cannot share.
I try.
Because I try Mac Mini just now.
Let me try. Can you all see my screen?
Yes, I can see.
I can't share the screen.
Okay, now okay already, Justin. Okay, now it's sharing.
Okay, good afternoon, everyone. I am from the another group. My group member is T. Zhu'e, Tan Qianming, and me, Justin Tan Yifeng.
Okay.
Today, I will share the presentation that just now Miss Nadera sharing to us. From the study guide. No, from the case study, the threat is not auditing service because KPD company is doing another service to their clients. So from the case study, KPD also engaged specialized to done the valuation of intangible asset. So it causes the problem that the auditing and the specialist that value the intangible asset is in the same group, same company. So it may cause the problem of sales review.
True.
So in here, why it is a threat. We said that this is because valuation that done by the specialist is one of the auditing is one of the non-auditing service that provided by KPDE group. The valuation calculated by the specialist will review by the same company, thus sales review occurs. So if most people in the same group, then like Adam said, that they will not want to correct their own mistake, then it will let people know that their specialist is not so special. Nice. Then
Like will make mistake. Correct.
Then we'll make mistake. Then the client also think that why you correct your own mistake that made by your own employee like this. Then the safeguard is the client KPMG.
KPED.
KPD sits for the second review by another audit firm. So this will increase the credibility of the financial statement.
Good.
That's all. Thank you.
Thank you, Justin, very much. Yeah,
because that name is in my head. So.
Like KPMG. I think yeah, purposely put almost the same name. Okay, so we are going to continue on discussing about this audit independence. Let me you stop sharing. Okay, so we are going to continue on this audit independence. And then after that we take a break now, and then after that we are going to continue the material, and then we are going to do a case study. Sorry, we are going to do the Kahoot quiz. That because we already sorted out the issue, then now is we can do it maybe after the break.